welcome back to another market update with Spiral Strategies. Bitcoin currently sitting at 64,230. Breaking down here from our consolidation pattern, we had a wedge pattern here building up from our structure here, from our downtrend and our head and shoulders neckline here. And we've now officially broken down, rejecting this pattern. Now looking to retest 62,000 and 61,000. We've got a very weak area here at our 50% level here. 3 or 4 episodes ago, we did mention that this 50% level was it had to be hit. However, we got that dead cat bounce before we could hit that 50% level, meaning that it was a bit suspicious because we did have to hit this 50% level. So this was either going to be a gap that needed to be retested on the down turn or in the bear market as we hit the cycle peak. However, it's looking more and more likely that we come back down, retest 62,000, 61,000, continue breaking our way downwards to retest 56,000, potentially 53,000 as well. This is going to be the long-term support for this $52,000, $53,000 level. We'll take a look at that on a daily and weekly time frame as well, but for now, short term, we are seeing this downtrend here. Filling out this volume profile very nicely though. As long as we can maintain 62,000, 61,000 and retest these lows and hold, that's going to be a really good sign. That's what we want to see moving forward. So, two ideas that we are thinking. Scenario one, which is best case scenario, is we go sideways and we consolidate between this level. So scenario one means that we range for about the next couple of months and never break below 60,000. Build our consolidation, get on the other side of this trend line, and we continue our way up into this latter half of the bull cycle. This is going to happen regardless, where we consolidate and then continue pressing higher into the latter half, especially as we head closer to elections, which is going to be in November. And that's where that key event is really going to take us on the other side of this trend line and take us higher into the cycle peak, which is going to happen late next year. That's the key time frame. Now, worst case scenario, which we don't want to see, is we come back down here, retest 52, 53,000, then continue to go sideways. And for those of you currently in this position right now, those who may have bought the tops up here at 73,000, 72,000, 70,000, this is not the time to be paper handing, because regardless, we're going to be on the other side of this heading into the new year next year. Regardless, we'll definitely break back above and retest all times highs, and then continue our way into that $100,000 level with a cycle peak somewhere around the $300,000 level. So guys, this is not the time to be paper handsing. This is exactly how everyone feels right now, and we can see that in the sell pressure. A lot of people are getting out, but that's definitely something you don't want to be doing, because the people that are getting out, more people are just going to be accumulating. This is something that you don't want to be selling at all, at least for the next year. If you're going to be selling, you want to be selling next year. This is not the time to be selling unless obviously you need the funds, but you shouldn't have been in that position in the first place if you really needed the funds. So keep your eyes peeled out, guys. We'll be keeping you guys updated, especially as we head closer into November event, which is the US elections. We'll quickly head on over into our daily time frame here. We'll get rid of our drawings here. I think you guys get the idea there. Now, paying close attention to this 50% level, let's take VPVR from here. Let's have a look at what it's telling us here. So as you guys can see, this is a definite key level. This $62,000 level is a make or break. If we print bearish market structure, we've got a massive gap and a date with 50 to 53,000. We'll definitely at least retest 57,000 against these wicks. Should we continue to break down, we're going to retest this level regardless, and then we'll probably tap 55,000. From there we could see a further dip, but then from there, that's where we should see, after a couple of months of sideways, that's where we should see a nice bigger consolidation. This all kind of happened way too quick. So I would say it caught us by surprise. That's what Bitcoin's going to do. It's just going to catch everyone by surprise. It's just how it does it. Each cycle is going to be slightly different because everyone's going to be looking at how things played out the last cycle. There are going to be patterns here and there which will follow generically, but it's never going to be the same. So history often repeats, but never rhymes. So that's what we're seeing on Bitcoin. We'll take a look at Ethereum as well quickly, because with Ethereum, especially after it had that massive push after that consolidation triangle squeeze, or wedge squeeze, similar kind of action. Because Bitcoin's dropped off, we're seeing all the altcoins drop off. However, Ethereum holding relatively strong, probably moving in line with Bitcoin, which is relatively strong when you talk about crypto on the broader scheme of things. So currently here we are range bound. So from 3,300 to 3,600. This is our range here, and that's what we want to see. We want to see it just fill out this range. Odds are there's a possibility, should we retest 3,300 again and not hold it, we'll have to come back down and retest the breakout level here at 3,100. So for Ethereum, long term, obviously still the same thing, still in the cycle, halfway through the bull, and we're just chilling here midway through. We never got that breakout above 40,000, about 4,000, which is a bit sad to see, because it would have been really nice to see it break out to 4,600. But nonetheless, we are consolidating, and consolidations are always good. We might get another dip back down, but we'll see a reaccumulation phase here if that happens again as well. So that's it for today, guys. Bit of a weird one. A lot of bearish talk, but we try to look on the brighter side of things. Definitely macro. Speaking macroly, if that's even a word. No, definitely bullish. At least for the next year. Right now, for the next couple of months, we're going to be sideways and bearish. Looks like we've made a cycle peak. Oh, sorry, our midway cycle has kind of peaked a bit early. Actually, we'll go back to go back here. So we pretty much retested or broke past previous all-time highs pretty early. Um, in previous cycles, we would have retested or come back to all-time highs more so during the September-October months, but we've hit that early, so all that's kind of left to do is to do that consolidation. So that's where we're kind of sitting. Um, yeah, please don't paper hands, guys. That's the last thing we need to be doing when speaking on a macro cycle. We're only halfway um, into the peak, especially since we just passed the halving event. Supplies have dwindled. This is going to be massive accumulations here. Um, so yeah, guys, don't paper hands. That's the moral of the story this week. And we'll see you guys in the next episode. And don't forget to subscribe and like our videos. Subscribe to our newsletters for buy and sell signals as well. Peace out.